Okay, let's go and get into it, everybody. James Rule, XRP. Follow me on Twitter at All the Money. We're going to look at some things. We're going to look at Larry Fink. We're going to look at Raoul Pal. We're going to look at all kind of amazing things happening. And when the market's down, you're thinking, am I doing the right thing? Should I hang on just a little bit longer? Well, after you see this video, it may change your attitude towards your investments, your crypto, blockchain, all the above. We're going to have a look at it. We're going to have a good time. If you did not get a chance to watch my video prior to this one called Put Your XRP to Work with Descent, Flare, and Monarch, you need to watch it because it shows you how to integrate your XRP into the Flare ecosystem to gain yield and put your XRP to work. Let's take a look at crypto numbers. $2.67 trillion. Bitcoin is up a little bit, 77,467. Ethereum's at 2124. XRP $1.36. Still a bargain, still a bargain, still a bargain. And we're going to take a look at it. Raoul Pal explains why crypto's biggest growth phase may still be ahead, criticizes selling early. And this is what I'm talking about. I showed this clip the other day. Don't F this up, with him talking to another guy about how the market's currently 2.5 trillion and how it's going to be 100 trillion in the near future. I mean, imagine this. $2.5 trillion. You look at the BlackRocks with trillions under management. You look at the DTCC with trillions and quadrillions and securities and tokenization and all the above. And you put this all together and you look at all the underlying payment rails using blockchain and tokenization and stocks and real estate and all the above put on the blockchain. Your investments, or the value of your investments, are going to be astronomical here in the near future. And right here, I'm just going to highlight the key points. As I always do, I'm going to leave a copy of everything I talk about in this video in the description below so that you may click on it and tear it down yourself. Here's the key points that Raoul Pal said. Raoul Pal questioned why investors would sell their crypto holdings if the market could eventually expand from $2.5 trillion to $100 trillion, people. Powell argued that investors should sell digital assets only when necessary rather than reacting emotionally to short-term market volatility, which is happening right now. The macro investor expects significant long-term growth as the broader financial system increasingly shifts into crypto rails. Despite the bullish outlook, investor sentiment remains cautious, with the crypto fear and greed index currently at neutral or 40. So things are going to happen when you least expect it. When you sell, it's going to go moonshot. When you buy, it's going to stay neutral. It always happens. As I stated in yesterday's video, I ran out of dip money. I ran out of dip money because I kept buying crypto. And you know what? I'm hanging on to it. And if an emergency arises and I have to cash out some of that crypto, so be it. You have to do what you have to do. But hang in there because great things are coming. Here's an example of holding. I'm going to read this article for you because this individual here purchased Ethereum back in the days, which was about a $620 investment, which turned into a $4.2 million investment by hanging on, by not doing anything, by riding the waves, riding everything, listening to the negativity, watching the negative news, watching the negative governments, and just holding it out long enough to benefit from this. Think about investing in Amazon when it was Amazon Books. Think about investing in Google. Think about investing in Apple right as the first iPhone came out. And you held it out for years and years and years. And all of a sudden, your portfolio started expanding because the rest of the world was starting to pretty much buy iPhones and blow up the stocks. And you were one of the early investors, just like XRP, $1.30 something. You're investing in a fortune right now. You're investing in generational wealth. So let's take a look at this. On May the 25th, 2026, one of the oldest possible Ethereum holders executed a trade in which they turned an original investment of approximately $620, people, into more than $4.2 million per the data Finbold, a tree from Arkham on the day. Specifically, the address tagged with both a Genesis block address and a dormant address on the Intelligence platform moved exactly 2,000 ETH across 3 trades, 2 involving 1 token each, and 1,998 between approximately 9 a.m. and noon. So what this individual did, which was smart, was do a test run. Anytime you send a large amount of crypto to another wallet or to an exchange, only send a small amount to make sure that you put exactly the correct wallet address. You put the destination tag, whatever you had to do to make sure that those very few tokens made it to the other side. And he did 2 test runs, and then he sent the rest, 1,998 Ethereum, people. Overall, the sold Ethereum was worth more than $4.2 million at the time of the trade. Thus, the total profit on the investment equivalates to roughly $4.2 million, as the original purchase was made when cryptocurrency was priced at 31 cents during its pre-sale. The address holds a total of 214.7 worth of digital assets following the move, with the majority being accounted by the ETH per data. So this individual here purchased, sat on it. I've been in this 10 years. I've held XRP for 9 years. So I'm not going to tell you how many or how little I have. I have liquidated some in the past couple of years. People call me stupid for doing so, but you know, when you get in early, do what you want to do. Don't let other people make your decisions for you. CIBC hires John Lee from Accenture to lead digital assets push. John Lee has worked in financial technology for more than 20 years. It says that the Canadian Imperial Bank of Commerce hired John Lee to lead the bank's digital asset strategy as the firm looks to create new products and services for fast-growing cryptocurrency and payment space, people. People are hiring into the banks that have blockchain knowledge. People are hiring into different organizations, like Carolyn Pham went to MoonPay. Carolyn Pham was with the CFTC. Other individuals are they're putting their money where their mouth is. They're moving to these blockchain companies. They're moving to these fintech companies because it is the wave of the future. It is a very smart move. That's why Ripple is acquiring all these different amazing companies that pertain to tokenization, to banking, to underlying payment rails. Ripple is smart. Ripple is extremely smart. Mentioning MoonPay, now you can buy Bitcoin, XRP, and more in ChatGPT via MoonPay. It says MoonPay's new app lets users buy cryptocurrencies, including Bitcoin and Solana, through ChatGPT just by speaking with the chatbot, people. I'm not going to read the article with you, but AI. When I interviewed Paul Unterberg with Uphold here last week, I mentioned a scenario. I said, Paul, I can't wait until I can go to Uphold, put $1,000 in, have the agentic agents or AI platform on Uphold whenever this happens, and say, look, I want this $1,000 to hit $10,000 by the end of the month. And then what happens now, the AI trading bots, the AI agents, the agentic agents or whatever go through and make trades throughout the day, throughout the night, every second if need be. And at the end of the month, your portfolio has increased in value. And Paul mentioned that they are absolutely working on this. He can't give a definitive time, but he says, yes, they are working on the platform to bring all of these awesome and wonderful things to Uphold. Many other centralized exchanges are going to be doing the same thing because AI by far is incredible. Some of the things that you can conjure up, some of the things that you can create, whether it be YouTube thumbnails, whether it be posts on social media, whether it be fundraisers, whatever, AI is starting to do everything for you. So I want to show you this clip I was at my parents' last night, and they had 60 Minutes on. And I heard Larry Fink talking, who's the CEO at BlackRock with trillions under management. I heard Andrew Ross Sorkin talking, and they were talking about crypto and 401ks and meme coins and all this on 60 Minutes. I posted this on Twitter earlier, and I want you to listen to this clip in its entirety.
Many people don't believe in capitalism anymore. And I think a lot of it is because they were not a part of the growth of the economy.
We went to Larry Fink, CEO of BlackRock, the world's biggest money manager, handling about $14 trillion in assets like pension funds. His annual letter to investors is a kind of industry roadmap. In 2025, it suggested opening our retirement 401ks, bastions of caution, to riskier private investments in the name of, wait for it, democratizing investing.
As I wrote, there are many great opportunities to be investing in startup companies, to invest in AI or data centers. Right now, we are precluded to put those type of assets in many retirement products. And the Trump administration has now said we are going to allow in our 401k products the opportunity to invest in these private markets.
But they are risky, aren't they?
Yes, but everything is risky other than keeping your money in a bank account overnight.
But we're talking about 401ks,
yes,
investing out of retirement accounts.
Yes.
You're risking the nest egg, or a little part of the nest egg.
But what the markets will teach you over the last 100 years, even at the worst moments, if you have the ability to persevere and you have a long-term horizon, you're going to do fine. And a diversified portfolio is essential. We're not suggesting, one shoe fits all. We are suggesting the opportunity to have that ability to invest in these private market investments.
He also believes we should be investing in crypto. It wasn't that long ago that the big bankers, Jamie Dimon and Larry Fink, were saying that crypto was stupid and a fraud.
I did say Bitcoin, because we were talking about Bitcoin then, was the domain of money launderers and thieves. But, the markets teach you have to always relook at your assumptions. There is a role for crypto in the same way there's a role for gold. That is, it's an alternative. For those looking to diversify, this is not a bad asset, but I don't believe that it should be a large component of your portfolio.
But Sorkin says some crypto can be abused in ways similar to 1929. Take meme coins, cryptocurrencies that can be manipulated by speculators who pump them up, then let them crash.
There are a number of examples where it felt like there was an inside group of people who were colluding to pump up some of these cryptocurrencies and other things. I'll give you a bizarre story of my own. I was on television with Larry Fink, and he makes a joke, I think, about how there should be a Sorkin coin.
I think the Sorkin coin should...
Sorkin coin. Well, 2 hours later, somebody makes a Sorkin coin. And all of a sudden, this Sorkin coin is now worth millions of dollars, and I'm watching it.
Are you serious?
Go up and up and up and up and up.
The Sorkin coin peaked at $170 million worth of trading in a day.
And I think today it does something like $20 or $21 a day. So,
So Larry Fink, Jamie Dimon, all of the big players, all of the big banks are now accepting blockchain technology, crypto, ETFs, tokenization. Why? Because the clients over the past several years of BlackRock and JP Morgan and banks and financial institutions have been demanding that they include crypto and blockchain in their portfolio, or they will move down the road and go to whoever is. So think about that. They are starting to accept this, no matter how much negativity you see in the news, no matter how many Elizabeth Warrens or negative Nancys or negative whoever's talk bad about crypto. It's happening. It's happening, it's happening, and it's happening. And you have to understand that if you are really, really, really researching these use cases, these utility tokens, I'm a utility token junkie. I don't mess with the memes anymore. You know, back in the days, oh, it was so fun. The James Rule XRP coin, the this coin, the that coin. No, I'm all utility now. 100% utility. Decent. Got this out. And if you are on social media like Twitter or Facebook or really any social media outlet, and if you ask a technical question about a wallet, about an exchange, about whatever, 99.9% of the time, the answers on your post are going to be fake assistance, fake help desk, scams and scams and scams. And Decent Wallets gets this out. Scam alert. We've seen fake Decent Support Assistant accounts replying to inquiries on X. Crucial safety rules. Listen to this, people. This is the most important thing. If you self-custody crypto, if you are your own bank and you put your own crypto into your own wallets and you wrote down all these crazy words to save your wallet, never share your seed phrase. Neither Decent or any other project team will ever ask you to enter your 24 words. Never, ever, ever, no matter what. If you get an email, a letter, a text message, oh, you need to update your wallets. You need to validate your wallets by putting in your 24 words. No, what happens is when you share those 24 secret words, secret seed phrases, the scammer on the other end of that message or email or text is going to duplicate your wallets on the blockchain, steal every bit of your crypto, and you're not going to know what happened. You're going to say, oh, I was updating my wallet. I shared my recovery phrases. Never share your recovery phrases, people. Hopefully this week I'll be able to interview the Cryptic Wolf at the Cryptic Wolf 1. He has been going out of his way to investigate XRP thieves. There was an individual last week, I'm not going to mention their name, that was robbed of many XRP. They contacted me. They contacted the Cryptic Wolf. The Cryptic Wolf spends hours and hours and hours identifying the wallets that stole the crypto, the exchanges that the wallets were created at, the exchanges where the crypto was cashed out at. And right here, the Cryptic Wolf said that this individual had 204,510 XRP stolen back in February, which today is worth $277,000. Eventually, all the stolen XRP ended up at KuCoin and BC KuCoin. These exchange-linked wallets are tied to theft addresses, Bybit, MEXC, Hit BTC, and Union Chain. I'm confident that the KuCoin account was KYC'd, but sadly, these exchanges don't help anyone unless law enforcement reaches out. Keep yourself safe and learn the scammers and hackers come in all forms, from fake support to fake apps. And this is absolutely correct. I'm going to leave a copy of this thread because he conjured up or generated this amazing illustration here showing how the thefts occurred, how many wallets it went to. So what happens is these thieves, well, first of all, they'll steal 200,000 XRP. And then what they do, they'll split those 200,000 into 8 or 10 wallets. And of those 8 or 10 wallets, they will continue to spread them out in other wallets, trying to show that the paper trail will not get them caught. Well, the blockchain doesn't lie. And the Cryptic Wolf dug and saw the exits of where this crypto was going. And like he said, you have to have law enforcement to reach out to these exchanges. You cannot just say, hey, Coinbase or KuCoin or whatever, this wallet address has stolen my crypto. I need you to tell me who it is. I need you to bring the cops up to your exchange and arrest them. Well, you can't do this unless you have law enforcement involved, which... hopefully soon they'll be able to crack down on all these scammers. So, but anyway, have a wonderful Monday. The James Rule Crypto Show. Be sure to subscribe, hit the like. It helps the algorithm for other people that are searching for crypto news. And have a wonderful day. And don't forget, people, I told you so.